Welcome to the monthly viewpoint for November 2023. Indian equity markets saw a very good rally from April to September 2023 as global macro at the margin was improving, and at the same time more and more sectors were participating in the domestic economy in terms of increasing their growth rates. However, last month, in the month of October, global macro has kind of deteriorated at the margin, and there have been some concerns which have actually come up. First is the fact that US 10-year has touched a psychological mark of 5% and above, and which is a 16-year high that we're trying to look at. Second is the conflict in Middle East, which can actually increase further if not contained, at the moment where we are. And both these concerns have kind of saw that the markets have started correcting, with Nifty down 2% month on month and small and mid caps reversing a lot of their outperformance in the month of October. Back home, whatever data we look from the domestic sector perspective, most of the high frequency data is fairly strong. Be it PMI data, air traffic data, rail freight data, UPI transactions, bank credit growth, passenger vehicle growth. Most of the indicators are trying to point that, domestic economy is doing fairly well. And to that extent, we expect that all domestic based sectors should do reasonably well in that overall context. Our assessment from the recent quarterly numbers is also that all domestic oriented sectors, be it banking, consumption, automobiles, capital goods and industrials, are witnessing good growth and are looking at an optimistic outlook, largely based on the hope that rural demand will further pick up from where we are today, and at the same time commodity prices are also coming down, which should aid operating leverage in many of these businesses. However, export oriented businesses, which are largely software, specialty chemicals and etc., are witnessing some kind of demand deterioration, and hence there is some kind of a concern. Most of these businesses were looking earlier at second half revival, which has now got postponed 6 months further from where we are today. Net, we think that we should be invested more in domestic oriented franchises than export oriented franchises on an overall portfolio basis, and we should expect some bit of volatility in the coming months, given the fact that global macro is kind of concerning at the moment from where we are today. Investors are well advised to have a disciplined asset allocation at the current moment, largely, which will give you a very steady return on a long-term basis. Given the backdrop of the overall economy, following are the funds that we will recommend for investments.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।